What did you find in this report in terms of the auditors of U.S. Chinese companies listed in the U.S.?
Thanks for that question, and thanks for having me. So if we take a step back and think about how we got here, the PCAOB is 20 years old, and we've been able to inspect and investigate audit firms in 50 jurisdictions around the world, but we hadn't been able to inspect and investigate in China until Congress in 2020 passed the Holding Foreign Companies Accountable Act, which gave us for the first time leverage to be able to inspect and investigate in China and Hong Kong. And today we released reports that show the results of our inspections from last year. And as you know, we did uncover a number of deficiencies, and it is an opportunity now for us to hold firms accountable to fix those problems.
Erica, good morning. It's Guy in London. Can you just talk me through what you found in terms of the audits that you went through? Were these audits that were being done by Western companies? Were these Chinese audits that were being done? Can you give a bit more granularity on what you found and who those responsible for any failure, who was responsible for any failures that you did discover and uncover?
Sure. So we inspected 8 audit firms in China and Hong Kong, 4 that were based in China and 4 in we inspected 2 firms, 1 in China and 1 in Hong Kong, and we inspected 4 engagements, which is companies in each of those audit firms. We did find significant deficiencies. It is similar and consistent with the types of deficiencies we found in inspections for other audit firms that have been inspected for the very first time. And what we've seen is in many instances those improve over years. What we do know about this is that these firms that we inspected covered 40% of the U.S. Market share of companies that were audited by China and Hong Kong firms. And by the end of this year, we will have inspected the audit firms that cover 99% market share. So we looked at the most significant companies that were audited by these China and Hong Kong-based firms.
So, Erica, if I'm a U.S. investor and I'm invested in some of these companies that are U.S. listed, should I sell them? Like, are you guys going to kick them off the exchange? When am I going to know that?
So this, what we have under the Holding Foreign Companies Accountable Act is a responsibility to inspect and investigate completely. And then we put out these reports and shine a light on what we found so that investors have information in order to make investment decisions and also to put pressure on the firms to improve. Our job is not as to whether or not these companies could continue to be listed, but it really is to give investors important information and to provide transparency, which is what we're doing in these reports.
Erica, how did the process work? Was it easy? Did you get what you needed? Did you have to fight for any of the details that were included in these audits? This was meant to be a kind of open book look at what is happening here. Was it that?
Yes. So last year we entered into an agreement with the PRC, and it was a tough agreement. And under it, we needed to be able to inspect and investigate completely. We needed to be able to choose the engagements and the firms that we inspect. We needed to have access to all of the work papers and the personnel, and we also needed to be able to conduct our investigations without interference. And we were able to do that. We were tough and we were firm, and we obtained the information that we need and did have complete access. And if the PRC instructs us in any way in our investigations or in our inspections going forward, the board will not hesitate to act immediately and consider whether or not we need to make another determination with respect to China and Hong Kong.